How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on US dollar versus the Swiss franc. As we can see, we got to our destination, our target, right? Our draw on liquidity was the swing high. We followed through with the narrative of price creating a higher swing low after breaking a swing high. So if you were to go back briefly, right, it's great, we got that, but let's catch everybody up to speed to understand how we were even able to get into these longs and predict where the market trend or draw would be. So first and foremost, let's bring it back. There's no need to rush this. So a new month starts, right? It's August. We're currently in August. But prior to August, we can see the most recent run on a swing point going into August was the swing high. So a swing high being broken, to me, by definition, is either going to be two things. First, I'm going to think of bullish momentum, simply because it broke that swing high and rated those buy stops. Anybody that was going short has a protective buy stop above here to stop buying, to get them out those shorts. Now that that happens, it's either going to continue in that direction or price is going to create a false break. So it's either going to keep going up in some nature or it's going to break this high and go short. In order for me to be confident in it going higher, I simply have to wait on my hands and wait for the next swing point. Some things will happen. You might see some speed to the upside, right? You got that busy or fair value gap here. You'll see that along the way. You'll see multiple of them. But keep in mind, we're simply waiting for higher swing low. Now, when I start to see inefficiencies form, I like to see if the higher swing low forms inside that PD array. We were talking about that. If you go back, watch those previous daily updates, you hear me talking about it constantly. I'm cautious if USWSI is going to come down in here, just like how dollar did, but it didn't. It held it. It gave us that higher swing low, 1, 2, 3. So I said, okay, we had that idea that it could pull down in here and then go higher, run the low, might false break to get everyone short. That was a scenario, and then push back bullish. But we didn't get that. We were protected, right? That swing low was protected. We were looking for a high probability raid on this candle's high because this candle here rated the third candle in this swing low formation. So 1, 2, 3. That third candle here, whatever day moving forward that breaks it, that high, that candle, you're going to be aiming for as a high probability raid on buy side liquidity on that high. So we were looking for longs going into Wednesday. Did we get it? No, we didn't get that. Might have had a short buy opportunity, but we didn't get that. We took a loser. Right? We didn't get that. Next day, we got a little something, but we took out the previous daily low. So we had a raid on a low. Now, we suggested that this could be it turning the corner. 1, 2, maybe we're going to pull up. But we were saying if it runs this low, one last time, I said if it runs the previous daily low again, there's a possibility we accelerate and go down into this fair value gap. If not, we fail to break this low and we create a higher daily low on Friday and we look to push higher. Play it forward. And this is Friday. Today's Monday. Friday the 8th, last week. We failed to break the low. So I was like, okay, we have another opportunity. We're either going to, on Monday, run down and run higher. So somewhere below the weekly open, somewhere by the Asian session, right? How do we utilize the Asian session range? Like, look back in those videos that we talk about on the channel. You'll see how we utilize the Asian session range for buy days. So if you were going to be aggressive this day and you suspected price to push higher, what buy opportunities were you looking for? Hint, discount opportunities and whatever that would mean going into the days and kill zones. All right. Play it forward. And we got this rocket ship to the upside. So we were in a small range. I told you a large candle was due. It was expected because the market was consolidating. It was getting quiet. It wasn't gyrating higher or lower very fast, causing a lot of noise. It gets quiet. People get uninterested. They change pairs. Psychologically, they've got the trader in their hand. The market, when they see these large candles, that's when they're most excited and they want to participate in the marketplace. But when the market is getting small like this, there's participation, regardless of retail, commercial. there's participation constantly. However, you can tell traders are probably going to get disinterested, or they're going to start to pick a side heavily when the market starts to range up, start building in orders, buy stops and sell stops, right? That's market sentiment buildup here. Really listen to what I'm trying to convey here. There's market sentiment buildup here, and they're just waiting to spill on one side. Sometimes it's a double spill. What I mean by like a false break. Again, we talked about that scenario. It could have came down here one more time and get traders in short. Whoever was short in this small range, already loading their shorts before the large candle. Let's say this large candle Monday was down instead, they would probably be in profit today. Those traders would have won. And then there's another pathway. It could come back up and go higher for the rest of the month. That was one scenario. Talking about the monthly as well. Look at where we are. Back at the monthly opening price. Think about this monthly candle, fractal. We were anticipating something here. Could we be getting a swing low? 1, 2, 3. Is August going to be the pivotal moment that pushes dollar back up from it selling off for pretty much most of the year? Do we get a turning point? Is this now a counter trend candle and a few others that are going to come behind to retrace price back up? Who knows? But as of right now, following the macros, again, we showed you from the first video of the Asian session. Look at me stuck in the Asian session. I love that kill zone. The first daily video that we talked about for August for you Swissy, we ran through why we picked it in the first place, what the seasonal tendencies were for the dollar and the Swiss franc by itself separately. We talked about the banks, the National Swiss Bank, their rate, and the Fed's rate of the United States. We talked about that, and we're trying to allow the macros and price action to flow together. And we're just looking for ideas that will support that. And these are the ideas. So you see we're going long below the monthly opening price. So you just take a look at the 15-minute chart, just real quick. I'll throw this on the chart. This is your homework. Look at this price action here. What's happening here? From the time the Asian session, from 8 p.m. to midnight, 2 a.m. to 5 a.m., and then 7 a.m. to 10. Pay attention to what's happening here. And what formation is this? Hint, AMD. Hopefully you found this insightful. Moving forward, just to recap, I still want to see price push higher. So let's see if price will start to accelerate towards this high here. We may get a fair value gap, possibly, to the upside, and we might even trade down into it and then trade up again, another higher swing low, because the pattern would repeat. What happened right now is essentially happening again. This swing high being broken was the next phase for the market to say, hey, let's print a higher swing low. That same thing could be occurring here again. We're breaking a swing high. See that? So it's like this. The same thing repeats again. Caution. Okay, if we want to get into this trend in a more safe way, right, in a manner that would naturally follow market's flow, we would wait for a higher swing low. Sometimes doing that, there is a con to it. So I'm trying to lay all my experience to you and what I think. It's my personal experience. I feel like the downfall for that, right, for waiting for a higher swing low or the next swing point to form in that direction, sometimes it doesn't happen very soon. Sometimes it might take 2 weeks to actually form, because the market now can just start accelerating and just keep going up and start printing candles up. But we have methods of how to get into that. If we don't want to be so conservative and we want to be a lot more aggressive on the market, we have methods of how to get into a bullish trend. For those that understand, you know what I'm talking about, right? Thank you for everybody that's in the chat. Thank you that's everybody in the community. If you ever need my assistance, you could always DM me. You have direct access to me. Welcome to the family, man. Appreciate you guys. Peace.